Welcome back to Canada's Real Deal. I'm your host, Anika Dogra, mortgage agent level 2 in Ontario.
And I'm your co-host, Anuj Dogra, a real estate broker in the Greater Toronto Area. And today we're going to be talking about the Trump tariffs. So if you guys haven't heard, President Trump announced 25% tariffs on all Canadian goods and 10% on energy. And in response to this, Canada set retaliatory tariffs back to the States, which was supposed to be effective February 4th. But since then, both countries have decided to take a 30-day pause. So, Anika, what do you think the impact of these tariffs will be on the Canadian real estate market?
Well, I mean, there's good news and there's bad news. So the good news is if you have any type of variable rate mortgage product, including HELOCs, your payments are likely to go down because the Bank of Canada is anticipating that this will weaken our economy. So we're going to have to probably continue to have rate cuts to combat that or to have a chance to kind of ride that out. So anything that has a variable rate will likely start to see that payment drop.
I think fixed rates will also drop because we've seen a huge decline in the bond yields. It's been the biggest gap between U.S. and Canada since 1997, right? So we expect fixed rates to follow, but doesn't this signal a weakening economy for Canada?
Yeah. So what we just mentioned was the good news. The bad news is, well, we don't know if this is going to be kind of bad or if it's going to be terribly bad.
Yeah.
If this is going to devastate our economy or if this is going to suck for a little while, but we'll be able to survive it because there's so many contradictory things happening all at once. And it's such an unprecedented event. So it's really hard to say what is going to happen.
And also the other thing is, I think there's just fear in a lot of people, right? Whether these tariffs are in place or not, we've already seen the impact, right? People just hear about tariffs and they're scared of buying. They're scared of, what that means for people who already own a home. Will the values of their house decrease?
Yeah, economics is mostly psychology. So whatever people expect to happen, that's going to have a big impact on how the economy will work afterwards. But we can also expect what corporations are going to do in response or preemptively in preparation for what they think the economy will be like in a couple months. So for example, if they think that they're going to start losing money or the economy is going to tank, they might start doing mass layoffs.
Yeah.
And so we'll see unemployment go up. And if we see unemployment go up, that means that we're going to go through a period of time where people are not as interested in buying homes because they're more cautious with their spending. And if there's less demand for homes, then we could see house prices drop.
Yeah, and I saw a projection. It said that we're projected to increase unemployment rate to probably north of 7-8%. And that's probably worse for Toronto, right? Since we trade a lot with the States and we have the biggest population.
We can expect that there will be a loss of jobs, right? But they're also expecting that the Canadian dollar will weaken. So our buying power is going to reduce a lot.
Yeah, which we've seen.
We have seen that as well. And we also expect that the GDP is going to lower. There's an expectation that the GDP is going to lower by 2 to 3% per year for the next couple years.
Yeah, so what I want to ask is Bank of Canada only really has the interest rates to play around with to attack these tariffs. What do you foresee them doing in response?
So like you said, the Bank of Canada only has the interest rates as a tool for them to combat what's ever happening in the economy, right? So if they expect that GDP is going to go lower, they're expecting a recession.
Yeah.
Right? But at the same time, if there's tariffs being placed on a whole bunch of products, then we're going to expect a widespread increase in prices, which would be an inflationary period.
Yeah, it's like an artificial inflation that's just being brought on. It's not even gradual, right? It's just being imposed.
Yeah. And if we had inflation, we would raise interest rates. But if we're going through a recession, we'll lower interest rates.
Yeah, see, this is why it doesn't really make sense to me. And I don't know what Canada will do for the economy because it's such an unprecedented thing that it could go either way.
Yeah, it's unlikely that they'll raise rates, though, because I think that it would be difficult for Canadians to survive that again after they just went through a period of high interest rates. But it's not out of the question right now. That is something that people should be prepared for, that we might have to increase rates again. We haven't really seen a period of where they go back and forth, like raise interest rates, lower interest rates. Usually it's kind of like a steady decline, a plateau, then a steady incline, right? But in this period, this might be a first for Canada. We might have to go back and forth to see what the economy requires at that time.
Yeah, so let's actually look at the products that have these tariffs and what Canada is known to supply, right? For example, lumber, right? We produce a lot of lumber and we trade with the States a lot. And they have much more people living there than in Canada, like almost 10 times our population, right? So they're building much more and utilizing lumber and other primary resources.
But if America's putting tariffs on our lumber, then it's going to drive up the prices of that lumber. So it's going to cost a lot for them to continue building these houses. And that's going to reduce the demand for our lumber. So either these exporters are going to have to find a new market to sell in, or they're going to have to lower their prices because they're going to have so much supply and try to sell it to Canadians. So maybe we could get lumber at a lower price, right? And that would help us make housing more affordable, or make it easier to get products to build housing faster. But that's unlikely to happen, because more than likely what's going to happen is that these companies are going to scale down first, right? They're not going to just prepare to be like, okay, let's sell our lumber for less. They're going to scale down. That means laying off people so that they can kind of keep their lumber at a certain price point.
Yeah. And if you think about it, lumber is just one thing, right? That goes into construction. We have appliances, we have glass, and all these things are going to have huge tariffs for Canadians too, right? Like coming back and building here. So if the cost of construction is going higher, I feel like you can probably project that the cost of housing should become more unaffordable then, no?
And it's not just new construction projects that are going to be impacted. It's also people who are deciding to retrofit their home or do renovations, because typically when you're doing these types of projects, you're going to buy new appliances. Those prices are about to go up, right? If you're upgrading your home. If you're doing any sort of infrastructure projects, right? If you're building a new community, the price of that metal, the steel, everything's going up. So it's going to cost a lot more to even build those communities as well, right? So it's not just the housing, but it's also, the other projects that go along with housing.
And the Canadian Trump supporters are saying we're just going to find new partners and that's how we'll solve the issue. And then we'll start making everything domestically and it'll be great for Canada. But the truth is, when you have to reroute your entire supply chain, that takes a lot of time. And we've seen that in COVID. It took months and months for Canada to just find a new partner for chips. And then the cost of cars went up, right? When something's been shut down and we're taking time to go find these new partners. So I don't think that's a viable solution for Canadians. And probably it will still increase the cost of goods.
Yeah, absolutely. We import so much from America. I don't think people realize we're importing billions of dollars worth of glass, right? Obviously, these projects need windows. We import billions of dollars of appliances, billions of dollars of hardware, all of these things that are required for these building projects, right? So we're talking about tens of billions of dollars being affected and having to find a new supplier for those things, right? It's not an easy task. It's going to take a couple years to really set that up in any sort of substantial way.
And yeah, the leaders, officials, premiers, the prime minister is all advocating for us to buy Canadian domestic goods, which is great. And I'm doing it too. But it's kind of short-sighted because I don't think that will be enough to sustain a Canadian company that was already trading and exporting things into America, right? If they have that huge base, I don't understand from a company perspective why you would stay in Canada.
Yeah, I mean, likely what's going to happen is a lot of these corporations are going to decide to move their plants from elsewhere back into America, which is probably what Trump wanted, right? So that will take time as well. Again, it's not going to be like overnight. That takes time to build those plants and move them back into America. But it does mean that there's going to be more foreign investment returning into America, right? Now, it's a question of whether Canada can attract the same type of direct investment and what that means for a Canadian dollar. Because right now, it seems like that means our Canadian dollar will continue to weaken.
Yeah, and maybe that will draw in more foreign investment into Canada, right? But other things have to change too. We need corporate tax relief for these companies if we want to keep them in Canada.
Right. Yeah, that's what makes America so attractive to these corporations, because they get that type of relief in America. And now if they're going to be facing these tariffs, it makes sense that they'll also think it's going to be cheaper for me to just produce in America and not have to face those tariffs.
And in other news, National Bank requested we do an emergency rate cut, which is just days after the recent one, January 29th. Why do you think they're kind of pushing this so quickly when we haven't really seen the impacts of tariffs yet?
I think they're taking preemptive measures because, again, we've just gone through a really rough period. The future's kind of in the air. It's all in limbo. So it's a little bit, I think they just want to take preemptive measures to give us a chance to get our footing. And there's so many renewals happening, and Canada's economy is so strongly built on home ownership. So I think they're a little bit like, there's too many unknowns right now. There's too many variables right now. Let's try to at least stabilize something, which would be like the funds or the wealth that Canadians have access to.
Yeah, I completely agree, because if inflation is going up, that's signaling economic growth. But then if our GDP is going down, that's signaling we're going into a recession.
Yeah, so it's just a question of which one of these forces is going to overcome the other, or are they just going to balance out?
Yeah, so like I don't know who the winner and losers are going to be after this all plays out.
Well, I think there's a strong chance that a winner would be current homeowners.
Really?
Yeah, because like we said, if the cost of construction, pre-construction is going up, we're not going to have as many units as we need to meet the demand for Canadians, right? So if we have less supply of these houses, then we're going to drive up the prices of the houses that we do have, right? But at the same time, like they might not be investing as much into upgrading their homes or something. So, and there might be an issue of unemployment and stuff, which might still drive it. Like it might make us question how much those house prices are going to go up by. But I think there's likely that the house prices will continue to go up, right? Even if it's small. What do you think?
I think if buyers are scared, and I've already had buyers back out just from hearing about the Trump tariffs back in January before they were even implemented. So I think if people are scared and they feel like it's a period of uncertainty, just that alone, I think we might see more of a stable market, and that previously thought a increase in housing prices, we probably won't see that this year.
But we can expect that the losers in this situation are going to be first-time home buyers, as usual. For many reasons, because like we said, cost of pre-construction is going to go up. So if they were trying to get into the market from buying those pre-construction units, that's going to be a lot more expensive than it was before. And resale is likely going to go up because there's not enough supply. So it's still going to be a difficult time for them. But on the bright side, there is a chance that interest rates will continue to go down, and that might help increase buying power as well. So it's really what you make of the situation, right? There's always going to be reasons not to do it. There's always going to be reasons to do it. And it's just a matter of what you do with that situation. That's why we always say, like, there's no point in timing the market. It's better to just do it when the time is right for you.
Yeah, and I think how bad the impact of these tariffs is going to depend on how quickly businesses put the cost on their consumer, and basically how Canada responds to these tariffs, right?
Yeah, absolutely. So in summary, we are going to face some issues with our GDP. We might lose some buying power because of our weak Canadian dollar. And there might be some issues with unemployment in the foreseeable future. But again, there's so many contradictory things happening between inflation and recession. We'll have to see how it levels out.
Maybe there'll be opportunity, but let us know what you think the impact of these tariffs will be in the comments below.
And don't forget to like, subscribe, and share this video if you saw value in it. And hit that notification bell so that you don't miss out on our next video.